Hello, everybody. Welcome to this Cantrade webinar that is titled Live Chat with Hibiscus Petroleum Berhad, a 10-year growth story. All right. So good evening, everybody. Thank you so much for being early. How are you guys doing today? If you are doing great and are ready for Hibiscus, all right, please type ready. Let us know if you are ready for Hibiscus. Safe and ready, huh? Okay, ready to rock. Okay, awesome. Okay, cool. It looks like my webcam, slide, and audio are working fine. So thank you everybody for tuning in early to this session brought to you by Kenanga Investment Bank, by Cantrade, and managed by Wealthfort. So today we are very excited because we got a number of senior management of Hibiscus Petroleum Berhad to come and join us to tell us their 10-year growth story. As you know, the crude oil price has been climbing higher and higher since achieving the bottom in April 2020 last year. So after the bottom last year, I think now the crude oil price has stabilized above $70 per barrel, and the bull never seems to stop. So that's why it seems that it benefits many of the upstream operators in the oil and gas sector. So that's why today we especially invited the management of Hibiscus Petroleum Berhad to come and share with us about their story. Okay, and last month, right, Hibiscus Petroleum also announced that the acquisition for some oil and gas asset from a Spanish oil major, which is Repsol, and that will significantly boost their revenues for the coming years. Okay, so today we're going to have the management to talk about this story. Okay, so as usual, disclaimer, whatever we share on this Cantrade webinar is only for educational purpose. So to give more information to investors so you can make an informed decision. So we have no recommendation to buy or sell any companies should we discuss in this webinar. So if you decide to make any investment decisions, you are 100% responsible for all your financial decisions. All right, cool. All right, so without further ado, let's get to the live chat today where you can actually ask the senior management of Hibiscus Petroleum Berhad about the burning question that you have for their company's business going forward. All right, so on our panel today, we have quite a number of distinguished panels. So the first one, of course, we have the managing director and founder of Hibiscus Petroleum Berhad, who is Dr. Kenneth Pereira. Hi, Dr. Ken.
Hi, Shane. How are you?
Yeah,
Can
I'm
you
great.
hear me okay? Yep, good.
Yeah, thank you. The second panelist we have online today is the Chief Financial Officer of Hibiscus Petroleum Berhad, who is Mr. Yip Chi Yong. Hi, Mr. Yip.
Hi, good evening, everyone, and thanks for joining.
All right. And the third panelist we have is the Senior Vice President of New Ventures, who is Dr. Pascal Hoss.
Hi, good evening, everybody.
Hi, Dr. Pascal. The fourth panelist we have is Ms. Joyce Vasudevan, Head of Corporate Finance.
Good evening, everyone.
Hi. And then the fifth panelist we have is the Vice President of Economics and Business Planning, Mr. Deepak Thakur.
Good evening, everyone. Hello.
Hi, good evening. And of course, we also have the Vice President of New Energy Ventures, Dr. Weini Chen.
Hi, good evening, everyone.
Yeah. And last but not least, we have Ms. Lily Ling, who is the Senior General Manager of Corporate Development from Hibiscus.
Hi, everyone. Thank you for joining us today. We hope.
Yeah. Hi, Lily. All right. So, well, okay. Are you guys ready? So, without further ado, let me invite Dr. Ken to give us a presentation of the Hibiscus Petroleum upcoming story. All right. So, with that, I'll hand over the session to Dr. Ken.
Thank you very much, Shane. Hope all of you can hear me well. I think there are some presentation slides to be uploaded. So, yep, Andrew, yes, great. This is fine. Hopefully, all of you can see the presentation slide. And I just want to start by saying that when Kenanga offered us the opportunity to do this presentation, I was particularly excited particularly because it is to a retail shareholder base. And, and this year is our 10th anniversary as a company. We started up 10 years ago. And in particular, we are very grateful to the retail support, because when we started up as a SPAC in 2011, no institutional shareholders in terms of funds were able to invest in a SPAC. So in fact, our reliance when we listed the company was all on individual shareholders. And there were about 3,300 people who really supported the company on the listing. And that's how we started up our 10-year journey. So whenever there's an opportunity for us to present to retail shareholders, I'm particularly excited to do it. It's just a way of recognizing that our startup as a company was really on the foundation of a good retail base, because we never had any institutional shareholders, because they were just not mandated to support a new SPAC, and we were the first SPAC. Subsequent to that, there were a lot of institutional investors in SPACs, but we were the first, and at that point in time, no one really understood the structure. So funds didn't come in. It was all retail shareholders, every one of them. And for that, thank you very much. And you have helped us definitely in our journey all the way. And until today, when we go through later on our shareholding base and we talk a little bit about it, you will see the number of retail shareholders that we still continue to have. Some of our retail shareholders have remained with us for all the 10 years that we have been since we've been listed. So today, Andrew, if you can move to the next slide. Yeah, this is the normal disclaimer. You've already had one already. So let me just move on to the next. Yeah. So I will cover part one of the presentation. The status of the company today. After that, Dr. Pascal Hos will cover the recent acquisition that was in the news of the Repsol assets in Malaysia. This has been a bit of a transformational asset for us, because it will more than double, almost triple our oil production, our oil and gas production, almost triple it. So it's going to make us a different type of company, a different size of company. And then, of course, today in this world where we are all looking at having a cleaner future for the generations to come, energy transition and the green agenda is very important. So Dr. Winnie will talk a little bit about what we are doing in this area and what our plans, a little bit about our plans for the future in what we call the energy transition strategy. So we will try to condense all of this and still provide some time for you to ask questions, because we have other members of the senior management team here with us today. And feel free to kind of later on ask the questions you want, and we will make sure that you will get good answers from CY, Deepak, Joyce, all of them who are here today. Okay, so apart from the presenters, there will be also some others to answer questions when they come up. So I think this is the first slide, and it kind of gives you it's a very, very quick pass overview of our startup from the days of our startup in 2011. So maybe I will just start with the place where you see the number 2011 with the Bursa Malaysia logo, and that was the time we listed on Bursa Malaysia as the first SPAC. And since then, we have if you look at what we have done, we started off at a time when oil price was over $100 a barrel. It was at a time when it was very difficult to buy a producing asset with a small amount of money, because oil business was a good business. So we had to take more risk to become a serious oil company, and we were more in the what we call the exploration side of the business. In other words, we were looking for oil. Okay, we drilled wells in Oman, we drilled wells in the Middle East, we drilled wells in Norway, we drilled wells in Australia looking for oil. We made one discovery in that process. But in 2014, 2015, oil prices started to drop. And when they dropped, it was then cheaper for us to buy oil already produced, already cash flow generating, and for us to actually buy what we call producing assets and really optimize the production from there. So over a period of time, we have done that. We operate assets now in Malaysia, in the UK, and we also have some other discovered fields in UK and Australia. And in this process, we have built up a strong team, we started with 3 or 4 people and 3 people in the company. Today, we are more than 400. And after the Repsol acquisition, we will probably go to about 1,200 people. So the company over 10 years has grown quite a lot. We, as a company, at this point in time, we have no debt. We are in a net cash position. We have won many awards now from Petronas for, for various categories of work. And if I can kind of just draw your attention to the table at the bottom of the right-hand side of the page, we have got about 2 billion shares in issue. Today, we started in 10 years ago with 3,000 shareholders. Today, we have more than 25,000 shareholders. We have a market capitalization of about 1.4 billion ringgit. When we started, we were 234 million ringgit company. Today, it's 1.4 billion. We're in net cash position, and you can see, we are from this chart. The company is now progressed to be a Sharia compliant stock, and we are also part of the FTSE for Good. But we are part of the companies in the FTSE for Good index on Bursa Malaysia, meaning to say that we meet certain what they call ESG criteria on the environmental, social impact, and governance side. We meet certain criteria to allow us to be on the index, and there are about less than 100 companies in this index. As a company, you can see the graph on the bottom right-hand side. We are tracking Brent price. The black line on that graph is the oil price. And you can see the shape of our share price, our market capitalization. You can see that we follow oil price very much, very, very closely. The other important thing is after 10 years, nearly 10 years, we actually came out with our first dividend earlier this year. We hope it's not going to, with the oil price strengthening, hopefully we will be in a position to declare more dividends, but we actually started paying dividends this year. So earlier this year, so hopefully this is a trend that will continue in the months and years going forward. The last point is we have assets. We own oil fields or interest in oil fields in Malaysia and in the UK. These are producing assets, and we have non-producing assets in Australia. In virtually all our assets, we are operating the asset or jointly operating the asset, meaning to say we are the people technically and operationally managing the asset. So it's been something that is we have slowly acquired as a company, that experience and knowledge and trust, actually, because when you're given operation of an asset offshore, the government in that country is actually trusting you to run something offshore in quite a hostile environment in the North Sea, particularly. They're trusting you to run something that where other people are. There are other people offshore on board with you, etc. It is not the safest of environments, so we have to work in a certain way, follow a lot of procedures, and work safely and efficiently. So this is the status of the company. We are undergoing, for the past 16 months, 17 months now, we've had a very long experience of the COVID-19 pandemic. Thankfully, our operations have not been disrupted. We've had to do a lot of optimization. A lot of people, particularly those working offshore, have made a lot of sacrifices to keep the operations going. They work very, very long, what we call hitches. They go offshore for long periods. They stay offshore for a long time. They stay in isolation and quarantine for a long time. All of that to ensure that there is no infection offshore. And a lot of people are making, and this is not only for Hibiscus people, a lot of people in the oil industry are making a lot of sacrifice every day so that the country continues to sell oil, whether it's in the UK or in Malaysia. We are continuing to work. Okay, so this is a little bit about what we're doing right now, and happy to take more and more questions later on. Moving on to the next slide. This is a little bit about our management team, and the board members. At the time we started the company, myself, Encik Zainul Rahim, our chairman, and Dato Sri Roshan Armugam, all were in the founding board of the company. And in the last 5 years, we've also had Thomas Mike Taylor and Dato Zarina join our boards. And you are most welcome. I don't want to go into their CVs too much in detail, but just to say, many of them are industry veterans. Mike Taylor and Zainul Ryan particularly, very, very accomplished careers around in many parts of the world, and have been very, very valuable board members for us. Dato Sri Roshan and Dato Zarina, coming more from the banking side, the finance side, have also been very, very helpful board members to us. So we end up with a very, I would call it, tight board, very, very cohesive board that has been working with a lot of industry knowledge, both from finance and both from the operations and technical aspects from oil and gas companies. And therefore, it's been a very, very enjoyable experience to work with and learn from these people actually who have been on our board. If you look at our management team, also the management team, a large number of people here coming from diverse backgrounds, oil companies, large companies, small companies, service companies, and also those in the support services coming from very, very, CY, our CFO who is on this meet call, comes from Microsoft. Joyce was working with me in Sakura before, was a co-founder of the team, co-founder of HIBISCS, as was Dr. Pascal Hose with Shell for many years. Before that with NASA. Lim Kok Kui, a geologist who then became a lawyer. Chi Seong worked with Newfield, Sapura, and then now with us and ExxonMobil. Before that, you can see Zalina worked with Talisman and then with ExxonMobil, now with HIBISCS. So a group of people who have come together, okay, and to build this company. And now with the movement towards the green agenda being very, very critical going forward, we've added, and if you see on the bottom right-hand corner there, Dr. Winnie Chen. She is a VP New Energy Ventures, and she's been involved in the Malaysian ecosystem for moving Malaysia into the energy development, the energy generation in Malaysia into the renewable space. Been very, very important person in the government for the last 15 to 20 years, working on policies, and she brings a lot of experience, knowledge, and incredible network. So we have brought her in to demonstrate that the company is serious in moving our business into some of the strategies you'll be talking about later, the cleaner technologies, the decarbonization plans we have, etc. So we should be talking a little bit about that. So the people in this company, they've slowly kind of we've slowly brought together a team that works very cohesively together. A lot of knowledge and experience. I think just on this page alone, there's probably about 300 or 400 years, maybe 300 years of experience in the oil and gas sector, and in the energy sector alone, maybe over 300 years of experience. So this is the type of team that we have managed to bring together over the last few years. Then on the next page, and I would put, and I said I would mention the retail shareholders, and you can see 40.6% of the company, about 810 million shares held as of 1st July by retail shareholders. So a considerable number of shares being held by retail shareholders. That's the importance. Retail shareholders bring us our liquidity. And then you can also see we got some quality corporate and institutional shareholders holding 36.7%. And then you see some big financial groups like Principal Asset Management with nearly 7%, and then the management team and Polo Investments. What I'm stressing here on this page is the fact that actually we don't really have a controlling shareholder. We are all minorities together, from the management right down to the last shareholder who owns a block of 100 shares. We are all minorities together. There's no majority shareholder calling the shots or whatever it is. It's not like that. It's just a company of people who just trying to, with a very aligned objectives, trying to deliver some good results. That's how we try to how we have set up the company, and that's how we are managing the company. There are some, if you look at the big balloons or the big bubbles on the left-hand side, you will see on the chart, you will see what is roughly our daily trading volume. So it's about 20, call it 28, 29 million shares a day average. Okay, our share price is there. You can see the number of shares we have in issuance and our market cap. So you can see the most of our large shareholders, Polo Investments, Principal Asset, and all of them, they know this is business, and they are comfortable to be here. Now, like I said, amongst some of the retail shareholders and some of the institutional and corporate shareholders have been there now for 10 years. They've been with the company now for 10 years. So they kind of really know the company, know the business, know the risks. They've seen high prices, they've seen high oil prices, low oil prices, but they remain quite loyal to the company. And for that, we are very, very grateful. Next slide, please. Okay, I mentioned earlier on that we have got some, we have made some progress on the ESG side, the environmental, social, and governance, area. We are on the FTSE for Good index. We were put on the FTSE for Good index, I think last December. So we have maintained that position. It's not easy. Some big companies also get removed from it, but it requires that we fulfill certain areas. We've got to kind of do a reasonably good job. We've been trying very hard. There's less than 100 companies in Malaysia, as we understand it, on Bursa in the FTSE for Good index. And here we are audited, I think, yearly to determine whether we remain on the index. And let me tell you, it's getting, every year they move the bar higher and higher. It's getting more and more difficult to remain on it. Some of the other things that we have been given some recognition for, Bursa Malaysia put us on what they call, we are a green lane policy qualified company, meaning to say because of our governance levels, they allow us to do certain, and our disclosure practices, they allow us to do certain types of transactions without having to go back to them for approvals. In other words, if we work with an investment bank as an advisor, we can actually do the exercise ourselves. So that is a good thing. So far, we have not used this, but it's one of those things that has been accorded to us. In terms of corporate governance disclosures by Bursa Securities, they ranked us in the top 9% for CG disclosure. And then the Malaysian, the Minority Shareholders Watchdog Group has over the years been ranking us higher and higher in terms of our disclosure practices. So we are now in their last assessment done in 2019, we were ranked number 38 out of 866 public listed companies for overall corporate governance and performance. Okay, so and then by the ASEAN group, it comes out with something every time our quarterly report comes out. We also put out a corporate business update, 8 to 10 pages maybe of about disclosure, and then we also have we also upload a video on YouTube every quarter showing, presenting our results. So we try to do a lot of things like that so that people understand our company more and more. Each time we have quarterly results also, we have a analyst presentation, and generally about 30 to 50 analysts and fund managers attend it every quarter. These days virtually. Before it used to be face-to-face, but nowadays virtually. But it's very, very well attended. Next slide, please. Okay, I think this is just to talk a little bit about our assets. We are present currently primarily in 3 countries, in the United Kingdom, in Malaysia, and in Australia. Today, as we speak, in Malaysia, we have about 2 million, just over 2 million barrels a year being produced and sold, and in the United Kingdom, about 1 million. So 2/3 of our business or revenue, 2/3 of our revenue at least comes from Malaysia, about 1/3 from the United Kingdom. Systems supply, so eventually the profit. So in Malaysia, we are currently having interest in the North Sabah asset. We've had this asset since 2018. We'll be talking a little bit about it in a short while. You'll be seeing a video about North Sabah in a short while, so you can kind of really get an idea what that is about. And then in the UK, we have a number of things going on. We have the producing asset. And if you look at the table on the top right-hand side there for you, it's the Anasuria cluster. That is a producing asset in the North Sea. That was our first producing asset. And then we have a number of fields, the Marigold field, the Crown field, Teal West, etc., a whole bunch of them, which are not yet producing, but are in a place where eventually they will get produced in the next 1 or 2 years. And that is our goal right now. Our goal right now is to have the Teal West, Block 2119C, all of that produced to Anasuria, and then around Marigold, another hub, we would call it another production hub, where Kilrami, Crown, and Marigold and Sunflower produce into. So we've got a kind of a twin hub strategy going in the UK. One is already producing, one we hope will be in production by about 2023, and then we would have 2 producing hubs in the UK. In Malaysia, we have the North Sabah asset, and now with the Repsol Malaysia, and a hub producing around the North Sabah asset also in East Malaysia. So we'll be also present in East and West Malaysia. So we're trying to kind of stay in the same countries and geographies, but actually also diversify our risk a little bit. In Australia, we have some assets. We have not done much in Australia for quite a while, since 2014 actually. Last time we drilled a well in Australia, 2000. Drilling costs in Australia are much higher than in the UK and Malaysia. In Malaysia, we are producing roughly at about US $15 to $18 a barrel, maybe in that range is our target. And the UK, we are in the $20 to $23 per barrel kind of range. Our production cost. In Australia, it's more like $35 to $40 a barrel. So while Australia is still profitable today, when oil prices are $75, $76, it is still not as profitable as the UK or Malaysia. So we are now investing more in the UK and Malaysia, and Australia is a little bit, on the back burner for now. So that roughly tells you where we are. We are in these countries because the legal space, the UK, Australia, Malaysia, all of them, the legal structure is something that we can kind of understand, work with. They've all got the same type of fundamental rules and regulations. So we understand it quite okay. They're all English-speaking countries, so even easier for us to communicate. So we're kind of staying in this area, okay? So we are, and our future activities will be around Southeast Asia, Malaysia, where we know the area, and around the UK. That's kind of where the primary focus will be. So Southeast Asia, I would say, with the new Repsol acquisition, we are starting to go into Vietnam. We're starting to be regional in Southeast Asia, and then we will be also in the UK. So that will be kind of our 2 main business hubs. Okay, so just to kind of give you a feeling, right? So Southeast Asia, we're tiptoeing into Vietnam, assets in East and West Malaysia. It is going to become, with the Repsol acquisition, it is going to probably become one of our larger kind of production bases, okay? And the UK might be a little bit small for a little while until Marigold in 2023 comes in again. So I think that is roughly a little bit about this chart. I think now, I think Andrew is going to play you a little video, I hope, and I hope it works out okay. So Andrew, you good? Maybe you can, yeah, go do it. So I think the idea there was to give you an idea of what was happening, what, the scale, and a bunch of platforms, offshore assets, even a drilling rig. We had a picture of a drilling rig there, drilling on one of the platforms. And also you would have seen a picture of the Labuan crude oil terminal. All of these assets we operate, we manage, and we look after these assets on behalf of Petronas, and so that's what we do in Malaysia on the Anasria cluster. Most of the things that happen in Anasria you can't really see because the wells are underwater. In North Sabah, a lot of the platforms and all the wells are above the waterline, but in Anasria, in the North Sea, with this FPSO that you can see on the screen now, the wells that are actually producing are underwater. So we can't show you that much. Okay, I think the video may have been a little bit kind of jerky, but I hope you get an idea of what the assets look like. And just to give you a feel, to operate something like the North Sabah asset, Sabah, and in the UK, in Anasria, we have about 120 people involved in the operations of the FPSO that you saw in the picture. Now, moving on to this section, part 2, I think Dr. Pascal will be walking you through this. This is the recently announced acquisition of the Malaysian, the assets of Repsol Malaysia, Repsol in Malaysia and a little bit in Vietnam. So I'll have Dr. Pascal just kind of take you through the following slides, just to get a feel of what we've gone and acquired and what it means to the company. So it's quite transformational for the company. So, I hope you find this of interest. Maybe Pascal?
All right. Thank you, Dr. Ken.
Thank you, Dr. Ken. So, but in the meantime, while we will transition to Dr. Pascal shortly, I just want to let you know that Dr. Ken, that your line was having breaking for a bit for just now. So if you have time, maybe you figure out how to, improve your internet connectivity. Yeah.
Okay.
For a certain part that we couldn't hear you just now. Right. So, well, let's welcome Dr. Pascal to talk about part 2, which is the proposed acquisition of the Repsol assets.
All right, thanks, Shane, and thank you all for joining at this late evening. So I'd like to take you through the next section of this presentation, where we talk about the acquisition that we recently announced. Yeah. So, and I'll also try to describe why we believe this is a transformative acquisition. Okay. So on 1st of June 2021, we signed an SPA with Repsol Exploración, which is a subsidiary of Repsol, the oil major based out of Spain, to acquire 100% of a company called Fortuna International Petroleum Corporation. Yeah. Now, this company actually holds participating interest in producing oil and gas fields in both Malaysia and Vietnam. So the structure on the slide kind of shows how these companies are organized and what we're actually acquiring. Okay. So there are 2 subsidiaries that hold the equity in the PSCs in Malaysia. Yeah, there are 4 different PSCs, and there's a third company that holds equity in a block in Vietnam. Okay. Now, what's interesting about this this collection of assets is not just the fact that it's a big size, but it also brings a mix of oil and gas production to Hibiscus. Yeah? As Dr. Ken mentioned previously, we've been heavily oil focused so far. And with this transaction, we're actually acquiring quite a bit of gas production. Yeah, so we are going to be showing our I guess our capabilities in operating gas assets as well, while also contributing to the energy transition for the company. Okay. Next slide. So what exactly are we acquiring? I mentioned already there are 5 PSCs involved. The participating interests vary across the PSCs, but what's most interesting is the fact that we will be operating all of these PSCs. Yeah? Now, for a company like Hibiscus, this is very important. Okay, we focused on acquiring, say, mid-life assets that have been producing for a while. They've been producing by large companies, previously Shell and Exxon. In this case, it's Repsol. And they produce these assets in certain ways, and they have a fairly high cost base. Yeah? We, as a small and agile company, we've come in to North Sabah and to Anasuria, and we've changed the cost structure significantly, while at the same time increasing production. The idea is to do the same thing here. So that's why operatorship is very, very important for the company. Okay, a little bit about where the assets are located. So the PM3 CAA, which stands for Commercial Arrangement Area, lies right on the border between Vietnam and Malaysia. Yeah, so it's actually governed by Petronas and by PetroVietnam. Right next to it is the Block 46, which lies in Vietnamese waters. But again, it's governed by both Petronas and PetroVietnam. Altogether, there are a number of fields here. Yeah, so you can see on the Malaysian side, they're all called after flowers. Nice coincidence is that one of them is called the Bunga Raya, of course, just like Hibiscus Petroleum. And you got the Vietnam asset, which is called Kai Ngoc. Okay, it's a sizable asset. This producing from 15 different platforms. There's 29 interfield pipelines. And all the oil that is produced there is produced to 2 floating storage and offloading vessels. Yeah. So unlike our North Sabah production, where everything goes to a terminal on shore, here everything is produced to 2 vessels, and then the oil is sold from the vessels directly. Okay. Now, this particular asset also produces a lot of gas. As a matter of fact, most of the gas is at this point is exported to Vietnam. And we contribute, or this asset contributes roughly 70% of all the gas that's consumed in southern Vietnam. So it's a very strategic asset for that matter. All the operations are manned from 2 of the 15 platforms. Yeah, so that's where all the people are housed, and that's where all the operations are coordinated. The next 2 PSCs in Peninsular Malaysia waters are PM305 and PM314. Now, since this is a corporate acquisition, we are acquiring these assets as is. Now, they ceased production in 2019, yeah, and currently the wells are undergoing abandonment, and there's a commitment to abandon the platforms in the future. However, we are actually looking at alternative uses potentially in the future, maybe together with our energy transition strategy. PM305 itself also has some production, not actually produced through our facilities, or through Repsol facilities, but produced from a nearby Carigali facility. So the field actually crosses over into the from Carigali crosses over into the PM305 PSC area, and that means that Repsol and us in the future will get part of that production. This field is still producing at this point in time. Last but not least is the 2012 Kinabalu PSC. This is located offshore Sabah. What's interesting here is that this asset actually produces to the Labuan Crude Oil Terminal, which we operate already, and to which all our North Sabah oil gets produced to. This will allow us to actually integrate the operations of Kinabalu with North Sabah, and therefore achieving some fairly good cost savings as well. Okay, let's move on to the next slide. So again, to summarize, what are we acquiring? We already mentioned it's a large asset. Yeah, so we're acquiring 205 wells, 17 platforms, 2 FSOs, floating storage and offloading vessels. Below, you can see some pictures. What it's actually trying to show is the scale of the assets. You can see that these are quite sizable, they're quite a bit bigger than some of the platforms that we have in North Sabah already. Okay, let's talk about an important topic. So how are we actually gonna pay for this acquisition? You may have seen the announcements and the purchase consideration of $212.5 million US. So how are we paying for this? Now, as this is, as I mentioned, a corporate acquisition, yeah, there was an effective date that was determined as part of the process. The effective date of this acquisition is 1st of January 2021. Now, at that point in time, so essentially on 31st December, midnight 2020, the company had a certain amount of cash in the company already. Okay, and that cash sits in the company. It wasn't removed, it's just sitting there. Now, on top of that, from the 1st of January until we complete this transaction, Repsol is continuing to operate this asset and is continuing to generate profits that will be maintained in the company. Okay, so the company itself is generating a sizable portion of cash that we will be able to use towards paying off part of this transaction. Okay, so that's the first part. Now, the second portion essentially comes from convertible redeemable preference share that we've already placed out last year. Now, this amounts essentially to a total of 197.7 million ringgit. Now, just to mention, I think Ken mentioned it already, the CRPS was specifically chosen as an instrument for an acquisition. Okay, and the acquisition has to meet certain parameters, such as IRR, payback periods, and this transaction qualifies for that. Yeah, so we can use the money that we have raised, and that is 197.7 million ringgit, which has already been converted into shares in the meantime. So that money is available for us to pay off a portion of the transaction as well. Now, Ken mentioned in the beginning already that we are a net cash company. We don't have any debt in the company, and we've been like that for the last 10 years. So we're actually in a quite good position to raise some debt for this transaction. Yeah, we're already talking to quite a few parties about this, and we intend to pay off the balance primarily with debt. Okay. We also have some internally generated funds already. The North Sabah asset, especially at the current oil price, is generating quite a good profit. Yeah, so we'll be able to use some of that money as well. And essentially, if there's any difference that we still need to raise at that point in time, we have the option to place out some more CRPS. Okay, but the idea is to essentially, first of all, there will not be any rights issue. Yeah, there's no need to. I think we have sufficient sources of funding in the company already. What we intend to do is essentially minimize dilution to the existing shareholders. Yeah, so we want to realize all this gain from all this extra production without actually placing out a whole lot more shares in order to pay for the transaction. Okay, next slide. Excuse me. Okay, and this slide is going to give you some idea about what it's actually going to do to the company. Yeah. So the top two charts, the first chart on the left shows our current net oil and condensate production rate in terms of barrels per day. Yeah. So currently that is about 9,000 barrels a day, 2,400 barrels a day from Anasaria, and 6,600 barrels a day from North Sabah. Now, the Repsol assets are going to add 9,500 barrels a day of production to that from 2022 onwards. Okay, so that is a roughly more than 2 times increase in terms of our oil and condensate production rate. But as I mentioned already, these assets not only produce oil and condensate, they also produce gas. And if you convert that gas volume to a barrel of oil equivalent, then the numbers look a lot better. Yeah. So currently we're producing a little bit of gas in Anasaria. Yeah. So the number currently is 9,400 barrels of oil equivalent per day. With the Repsol assets, that's going to jump up to 26,800 barrels of oil equivalent per day. Yeah. So that is roughly a 3 times increase in our current production rates. The same story goes for our reserves. Yeah, so the 2P reserves, these are the barrels of oil that are left in the ground that are currently producing already. Currently, we are looking at 46 million barrels, and with the Repsol assets, that number is going to jump to 67 million barrels. And adding the gas, that number is going to jump to 81 million barrels of oil equivalent. Yeah, so that's what's really interesting is if some of you know the company and you know what our vision and mission were for 2021. We set ourselves a target 5 years ago to reach 20,000 barrels a day and 100 million barrels of oil equivalent of reserves. So with this transaction, I'd say we come very, very close to achieving that target. Okay. All right. So you've seen the number of barrels that we're going to add. So what does that actually mean in terms of money? Okay. So over the next 5 years, we've done based on a certain oil price projection, which is the Brent futures projection. Yeah. We estimate that this asset is going to contribute net cash flows of $255 million US, or 1.1 billion ringgit. Yeah. That's adjusted for potential third-party liabilities. Now, when you look at the EBITDA numbers, which is what the company focuses on a lot, what's really important for us is our cash flows. We believe that over next year, these assets are going to add roughly $135 million US to our EBITDA numbers, our current EBITDA numbers. Yeah, and the bar charts below, it kind of shows how that measures up against our current financials. Yeah, so the financial year ended on 30 June 2020. We reported an EBITDA of 213.3 million ringgit. Yeah, last year that number was 250.9 million ringgit. So continue that number forward and then add the 558.8 million ringgit on top of that from the new assets. That gives you an idea of roughly what we're looking for the next financial year. Of course, keep in mind that's only for the last 6 months of that financial year. Okay, so actually go back 1 slide, please. Okay, so we're going to generate quite a bit of cash. Yeah, now quite a bit of this cash is going to be reinvested in the assets. Yeah, there's quite a lot of wells still to be drilled. There's a few in North Sabah, for example. There's an additional facility to be built. But on top of that, it's also going to give us a bit of money to look for additional acquisitions in the regions of our focus. Yeah, so in Southeast Asia and the UK. Okay, but most importantly, it's also going to allow us to continue to pay dividends to reward our shareholders. Okay, next slide. Okay, so what are the key benefits of the proposed acquisition? Now, I've touched upon some of these points already, but it's very important when we talk about our energy transition we believe that gas plays a very, very important role in the energy transition. Now, some countries, they can very easily switch to wind and solar. It's not necessarily that easy in Malaysia. We believe gas is going to be very, very, very important for this country going forward. Now, these assets are going to add about 50% of the production of these assets is gas. So it's going to add quite a bit of gas production to our current portfolio. Yeah. I mentioned this briefly already. We're going to be able to achieve quite a few cost savings through merging of our operations. Yeah. So we've already identified quite a few of these areas where we can save costs. Yeah, by essentially merging or integrating the Kinabalu and the North Sabah operations. First of all, second of all, we operate with a significantly lower overhead than oil majors like Repsol or Shell. So that will reduce the cost quite a bit. Yeah. And of course, we already have a good relationship with Petronas and with Petronas Carigali as our partner in North Sabah. But we're now going to add Petro Vietnam as our partner in the PM3 CAA and in the Block 46 assets as well. Yeah. So with our intention to slowly grow in Southeast Asia, these are very important relationships to build upon. Okay, next slide. All right, so just to kind of summarize where we are now. So this acquisition is very much in line with our strategy of being very selective about our acquisitions and to acquire high quality assets for very good price, I'd say. Okay, so Ken have already mentioned the first producing assets to be acquired was the Anasaria cluster back in 2016. Okay, and this essentially gave us our first oil production. This was a deal that we did with Shell and Exxon, and the timing of it was such that essentially we acquired for quite a good price. I think oil price was roughly $45 a barrel at the time of the acquisition, and then kind of went up after that. A similar story for the North Sabah PSC. So after our successful transaction with Shell and Exxon in the UK, Shell was quite keen to work with us again. We were successful in this in a competitive bid for the North Sabah assets, and that's more than doubled our production at that point in time, added significant reserves. And that once again set us up for this acquisition. Yeah. So once again, once we actually put our bid in, oil price was quite a bit lower. It's been rising steadily since. Yeah. So all our valuations initially of the assets were done at a lower oil price. So we believe there's quite a bit of upside already being materialized as we speak at the moment. Yeah. A little bit about the growth of the company. Yeah, as Ken mentioned already, when we started the company in 2011, it was essentially 3 people and a board of directors. And we've steadily grown over the years, some through natural growth and some through acquisition. Yeah. So in 2015, when we were doing some work in Australia, we were only 36 people. And then with the Anasaria acquisition, that grew instantly to 148 people. We took on quite a few people from Shell and successfully integrated them into the Hibiscus family and kind of transformed their way of thinking into a small company mindset. Then in 2018, with the North Sabah acquisition, that number jumped up to 415 staff. Again, we took on a lot of Shell staff, 245 people from Shell, and that was quite a challenge. We had to integrate everybody, and again, we were in different locations, and we successfully again integrated all these people into the Hibiscus family. And I think if you ask them today, they probably don't remember working for Shell. So going forward, this transaction is once again going to transform the company. You know, by the time we're done, say by next year, the company will have over 1,200 people. Yeah. Now these are 1,200 people with such a diverse background, such a diverse set of skills that we can deploy anywhere in the world that we want. Yeah? It'll help us significantly when we're looking at future acquisitions as well. It'll help us look at cost savings across the different assets. So we're quite proud of this, and looking forward to getting this transaction completed. Thank you. Okay.
Dr. Ken, you are muted.
Yep, no, I was going to say, now I think I'd like to introduce Dr. Winnie Chen. She's speaking on the strategies we have to move our business, to decarbonize our business and also to move into some clean technology investments. So I'd just like to introduce Winnie, if you can continue with the presentation.
Thank you. Sure. Thanks, Dr. Ken. And also, I think we have heard for quite some time a good presentation from Dr. Pascal. I think importantly, one key takeaway that he mentioned is that this proposed acquisition of Repsol, which has such a high gas content, in it of itself is actually an energy transition strategy. Now, energy transition is a topic that is extremely close to my heart. And as Dr. Pascal has mentioned before, why is gas important? Now, gas is important in the future of energy because in the future of electricity in particular, especially in a recent report that was actually released by IRENA actually a week ago. Now, according to IRENA in their World Energy Transition Outlook 2021, by 2050, 90% of electricity generation would be supplied by renewables, of which 63% would come from solar and wind. Now, the nature of these renewable resources, such as solar and wind, is that they are very highly intermittent. So that's why for quite some time, analysts have already concluded that actually natural gas is going to be very important in the future of the energy mix, being because its role as a transitional fuel or a bridging fuel. Yeah, why is it called a bridging fuel? Because renewable resources such as wind and solar, they are highly intermittent. And at this point in time, there are actually very few technologies out there that can manage the intermittency of renewables. And gas-fired power plants, they can ramp up very fast. So therefore, within the next, especially the next 20 years, while battery and other solutions catch up in terms of its cost learning curve, therefore, gas will be very important. So that in itself is already a transitional strategy for us. But aside from that, in terms of our energy transition strategy, it is actually framed by two pillars, as you can see in this particular slide. One pillar is on decarbonization and another pillar on the green investment. Now, on the decarbonization, the key and the main gist of it is to actually decarbonize our footprint. Yeah? And our commitment to decarbonize, as according to the slide here, will actually reflect our responsibility in upholding our environmental stewardship. And just to also emphasize that earlier part of this year, for Hibiscus, we've actually included a net zero emissions producer in our mission statement. And that basically aligns, especially in UK, where we have our Anna Surya operating there. The UK has a legally binding net zero commitment. So in that regards, AOC, which is operating in the UK, they have their net zero policy that you can check in their website. And of course, our net zero aspirations also align with the fact that Petronas in November last year, they've actually also announced their aspirations to be a net zero carbon emitter. Yeah. So in that regards, when it comes to decarbonization, what we are looking at is that we are also wanting to set our own targets for it. So therefore, within this year, we're looking at establishing our baseline, our targets, and also, of course, to develop decarbonizing strategies. And for that, it is very crucial to work together with our regulators, yeah, and also together with our industry partners and supply chain. Now, moving on from the decarbonization pillar to the green investment. So I've noticed that just now Ken was talking about green investment, and also actually there's a question posed about how does Hibiscus view about the solar energy? Is it competing to us? So of course, for us, investing in renewable energy, and not just renewable, but also clean form of energy, is actually one way of decarbonizing our portfolio, yeah, in terms of reducing our carbon intensity per energy actually produced. And for that, we're very pleased to inform that the board has approved our investment criteria. And our objective is to create a balanced portfolio between focusing on investing on mature technologies as well as emerging technologies. And in that regards, we want to emphasize that we endeavor to support R&D in pursuing green innovations. This commitment is important because if you read findings from the IEA that was released in November last year, the known technologies that we have for today will not be able to bring us to our net zero goal. So there is still an innovation gap that we need to bridge in order to reach our net zero. Yeah. So Andrew, can we move to the next slide, please? So the next part of the decarbonization, which is an important conversation for us, is that what are we going to do with our new assets, yeah, in terms of our decarbonizing strategies? And the answer to that is it's no different from our existing assets. Yeah. So this particular slide you can see here is actually involving the steps that we're going to be carrying out. The first is, of course, to prioritize abatement, to look at a suite of solutions and to deploy starting from the lowest cost strategy and what we call the marginal abatement cost curve approach. Yeah. And then in terms of strategies, there are 5 known strategies already out in the market. Firstly, is on the optimization and efficiency. That's where we look at improving the use of energy in terms of optimizing as well as the production efficiency. Then we're also looking at enhancing reliability. And this is where we try to increase the uptime of our gas compressors by improving their availability rate. Yeah? And in doing so, we reduce our flaring emissions. And also it helps to improve the reservoir maintenance as well as part of the total well management. Then the other part of it is also the fuel switching. So by fuel switching, we mean by switching from actually either gas or diesel, especially for our platform, yeah, to cleaner forms of electricity, such as the use of solar and wind. It's something that we are already actually deploying for our North Sabah operations. And the other part, which is very important, is of course we need to address flaring and venting. So we are looking to invest in technologies that can actually help to reduce flaring and venting. And also, of course, in some of our operations, we've already included such technologies as the ELDA. The ELDA stands for the leak detection and repair. And lastly, of course, is to explore as well the nature-based solutions. You know, the natural capital is an important investment. In Malaysia, we are looking at 55% forest cover. And that is very significant in terms of a carbon sink. So for that, we are also looking to see how we can further explore on the nature-based solutions in the future. And basically, that is a short summary for the energy transition slides. And I'd like to pass the floor back to Dr. Ken. Thank you.
Thanks, Winnie. I think you know, that kind of concludes our presentation formal presentation. And now we get to the enjoyable part where you can ask us some questions and we can kind of provide you some of our answers. The whole team is here, the whole senior, quite a few of the senior management team are here to answer these questions. So if Shane, I think you've been collecting questions from some of the viewers, so maybe you can share some of them with us and we will try our best to answer them.
No problem. If you have any questions to ask the senior management team of Hibiscus Petroleum Berhad, please write in the question and answer box, not the chat box, okay? Write in the question and answer box and then we will address them. Of course, we have many of you here on the line, so I think we'll only be able to cover 10 to 20% of the questions due to a time limitation. So let's get the ball rolling. All right, so the first question is by Meg. What do you think of the Annex 9 requirements and has it impacted the operations and profitability?
Pascal, you want to do that? The Annex 9 provisions for, I think that's for quarantine and for...
Yes, correct. Yep. So of course, we had to comply with all SOPs, and we've actually gone above and beyond the SOPs that were required by Annex 9, and because it's very critical to keep the oil production going and the operations going offshore. So what we ended up doing was we complied with all the quarantine requirements. We got our own team of people doing swaps. Everybody gets tested all the time before they go offshore and they come back from offshore. Of course, this added quite a bit of administrative procedures, a lot of management that we didn't have to do before. So yes, it increased the cost a little bit, but so far it's been managed quite well. And we managed to keep all our essentially COVID away from offshore and away from our operating bases.
Yeah, and just to kind of add to that, I think in Labuan, the team even set up our own green bubble to keep the crude oil terminal going. So we had our own hotel. We had people in our own hotel, transported them within a bubble, within a confined kind of group. And we are keeping that going as well to ensure that these people are isolated and keep the operations going. So a lot of activities are being done to make sure that the operations are not disrupted.
Okay. The next question is by Faisal Hashim. Besides PSC, do you own or lease the production asset like the drilling rig and FPSO?
We own 50% of an FPSO in Anasuria. And that is the only real ownership of an asset that we have. Okay, so the Anasuria FPSO, you saw it on the video just now. Mm-hmm. We have a 50% ownership of that asset.
I see.
So, okay, so in terms of ownership of a facility, that's what we have. In Malaysia, all the facilities that we run are owned by Petronas. All those platforms are owned by Petronas. The drilling rigs, etc., are things we charter. But in the North Sea, the FPSO is 50% owned by us. That's correct.
Okay. Now, could you share how did you survive the last oil crash in 2013 and 2014, and also the recent one in 2020?
I think there were different conditions. The 2014 oil crash. Yeah, that's correct. It was just at the time that we were buying Anasuria, and you're right. The situation there was it was a very, very difficult situation. But thankfully, again, we had shareholders to support the company. We did an equity raise at that time that was well supported, and we were able to raise some money that allowed us to buy Anasuria. And once we bought Anasuria, then it was a matter of keeping our costs down below, keeping the cost down below the price of oil. And fortunately, after we bought Anasuria, the oil price started going up. So we were able to get through that period. And we came out stronger for it because it taught us a lot of, discipline. The last one last year was a lot of effort by the team to bring costs down to the lowest possible level. I mean, we do that all the time, but also then to defer some of the maintenance activities that we were doing proactively, defer it to a point when it needed to be done. And also one more important thing, when the oil price drops, the cost of services also drop. So if you're trying to do some services at the time, it might be lower in, slightly lower in price as well. So you can actually drop your operations price as long as you keep your operating price below the revenue you get for oil. Then you should be okay, and that's our main focus. Our main focus as a company are three things, and you will see it in every one of our quarterly reports. We look at OPEX per barrel, operating expenditure per barrel of oil produced. We are very, very conscious of that KPI, so we monitor that a lot. We look at our uptime, meaning to say what is our reliability. How much of our we look at reliability. We look at how much, whether we are running at 80%, 90% uptime, meaning to say the facility is available for production. So for North Sabah, we're running average 95, 96% uptime. In Anasuria, we're running 88, to 91% uptime, which are very, very good numbers for those type of assets. So uptime is very critical. OPEX per barrel is very critical. And of course, production is very, very important number. So these are the three numbers. If you can manage it, these are the things that we can control. We cannot control oil price. Oil price is something that OPEC and all the other and demand really controls, not us, but we can control our costs. So we try our best to control our costs.
Okay. There seems to be a few questions asking about your production cost. What is your average cost of production?
Let me get Deepak into the picture. He's been very quiet all this while, so maybe Deepak say a few words. Okay.
Thank you, everyone. So the question was, I think, OPEX per barrel for this asset which we have acquired, which we are acquiring, which is Repsol Malaysia asset. So the unit operating cost for Repsol Malaysia asset is roughly about $10.5 per BOE. Given the fact that it's about 55 or 60% of the oil and the remaining 40-45% is the gas, we believe there is a significant amount of room to improve these OPEX per barrel numbers once Hibiscus takes as an operatorship and they start operating this asset after the completions. And we would like to emulate the same our plan which we did for North Sabah. So when we acquired the North Sabah, at that point of time, the unit operating cost for North Sabah was roughly about $20 per barrel. And when we acquired this asset subsequently with all the optimization work, which Ken was talking about in improving the uptime and increasing the production levels, we managed to reduce the operating cost below $15 per barrel. So here we see similar kind of opportunities to reduce the operating cost going forward as well.
Okay, thank you so much, Deepak. Okay, there's also one question by, hang on, yeah, let me okay. Hang on, I lost track of the question. All right. So why, Danny would like to ask, why is Hibiscus acquiring marginal fields with limited field reserve from oil majors like Shell, Petronas, etc.? What is the economic justification relative to the acquisition price?
I don't want to say that these are marginal fields. They are marginal fields if, firstly, I think we have to understand, we have to put a definition to what is marginal. When we talk about something being marginal, it's actually about economic margins. And if we take an asset from Shell or Repsol or any one of the larger companies that is operating at a much higher cost, and we are able to reduce the cost and increase the margin, then maybe it is not a marginal field anymore. Let me give an example of Anasuria. When we took over Anasuria, I think Deepak can remind me about this, but the field was operating at roughly about $30 a barrel. And at that point in time, about 30, right? I think.
Yeah.
And at that point in time, oil price was maybe $34 or $35 a barrel. So the margin on that barrel was very small. Now, when we took it over and we cut all the overheads and we did all the work that we normally do and make the operation a bit more agile and lean, the price came down, the OPEX per barrel came down to about $20 a barrel, $20, $21 a barrel, in that range, maybe even some quarters, even as low as $18 a barrel. So then we had increased the margin on that barrel. What happened then is the life of the field. The field was originally the life of the field when we took over Anasuria meant it was going to, at Shell cost structure was going to end by 2023, 2024. The field was going to come to an end because of the, there was no more money to be made from that field. But because we have dropped our cost, Anasuria is now projected to continue producing until 2035 with these type of cost structures. So margin, when you talk about marginal field, to one company, it's a marginal field. To a smaller company with a leaner cost structure, it is not a marginal field. It becomes a much larger field. So that is the reason why we take over these fields. At certain point in time, you need to you need to get a different type of operator to operate that field, a leaner operator. And that is the position we want to be. We want to be a company that is agile and lean and able to go into these type of situations and increase margins on the barrel being produced. That's really what marginal field is about. So when people talk about marginal field, the important thing to understand is marginal field to a large company could be a big field to a small company.
Wow, very well said, Dr. Ken. All right. Aaron has the next question, which is, could you please quantify the breakdown, maybe as detailed as you're comfortable, about how your team calculated the estimated IRR of the new Repsol acquisition?
Sure. Deepak, you want to, Andrew, you want to move to the slide where we have the price deck that is being used by RPS, right? Deepak, I think that will be helpful.
Yeah.
I think there is a slide where we show a price deck, actually.
Slide 29.
Yeah, slide 29, please, Andrew. That will help, I think, in the answer of this question. Yeah.
Okay. So just to give a sense in terms of the valuation of this asset and what price deck was used by independent expert. So RPS Energy, very well reputed third-party subsurface expert, they did the technical due diligence, and they also did the valuation of this asset. So the 2P valuation, which is the mid-case valuation of this asset, is at $285 million US, and against the purchase consideration of 212.5 roughly, right? So the crude price deck which they used, you can see on the top right hand side, which is to a very conservative compared to the current crude price, right? So for example, currently the Brent is trading more than $73-74 per barrel. But what the Brent price, which they use in the valuation for 2021 average is about $60 per barrel. And then it goes down to $53 per barrel in 2024. And then, it goes to about 60 for next 4 to 5 years. So very, very conservative crude price deck compared to what we see now. And at the same time, not only the current price deck, but if you go to any oil and gas commodity research house, they're projecting roughly about $70 or $75 per barrel for next 2 to 3 years. Even the Brent futures, or which is the consensus price for next 2 to 3 years, is about $68 to $72 per barrel. So based on this set of crude price, the valuation is 285, right? And if the crude price is maintained at the current level, for example, 72, right? You can imagine the valuation of the asset would be very, very stronger, even stronger compared to 285. And then you compare it against the total purchase consideration which Hibiscus is paying, which is 212.5, right? So that's how you compute the effective IRR or internal rate of return on the investment for Hibiscus. And you can see it's going to very, very significantly, very strong IRR for this asset. And this was one of the also criteria to use, to use the CRPS funds to acquire or to use in the completion of this transaction. So the minimum IRR hurdle is about 12%, and then maximum payback period is 5 years. And these asset transactions actually comfortably meets all of the criteria. I mean, IRR is much stronger than what is required here.
Okay, thank you so much, Deepak. So the next question is by Wei Tian. North Sabah's EBITDA margin is relatively stable, but why is the Anasuria EBITDA margins all over the place?
Okay, I think this one I have to ask CY because he is very quiet today. So he has to answer this question to you, being the CFO of the company.
Okay, hi, good evening. Well, North Sabah is under the PSC environment, and there are some provisions in that arrangement that sort of regulates the profitability when oil price moves up and down. So in this, so it's a good thing in a way, because then it is more predictable, as you rightly put it. So when the oil price goes up, there are certain provisions in the arrangement with Petronas that we also contribute certain amounts back in the form of a supplementary charge. Now, if you go to the UK environment, it is more susceptible to Brent movements. So when the Brent goes up, then the price will also, the profitability will also move at the same, in the same way. So I think this, so thanks Andrew, you have put this slide across, and this tells, this is a good snapshot. If you look at the chart on the right side, the black bar is basically the EBITDA margin. What you can see is it is fairly consistent across the board from over various periods when oil price has moved up and down. The oil price is really the one in the bar in orange, and the cost per barrel, OPEX per barrel, will be the bars in blue. So irrespective of how oil price have moved in the past, this is what we have seen, and that's really the difference as compared to an industrial cluster is a little bit more choppy, as you already caught up. So that's really the difference between the two operating or regime that we work under.
Yeah, so I think in summary, there are different taxation systems applicable in Anasuria and North Sabah. And you can see in North Sabah, we have more in the Malaysian environment, the taxation system is more stable. But when oil prices go up, we give away a little bit of the upside. But when oil prices come down, we are more protected. So in the Malaysian environment, it is a very kind of stable EBITDA margin. In the UK, we are a bit more exposed. If oil prices go up, we have very high EBITDA margins. If oil prices go down, they can also go down to very low levels. So it is nice that we have one of each type of system in the company. So we have a good safety net in the Malaysian environment, and we also have a good place for upside in the UK.
Okay, I see. Now the next question is, since the Australia's assets are expensive to develop, why don't you consider to sell them?
This is something that the board has asked us to look into next year. You know, what is our strategy for Australia? We need to come up with a long-term strategy. I mean, the oil prices go up and down. Today, for example, the oil prices at $70 makes Australia a good place to invest also, because you got $35 of headroom between your OPEX operating cost per barrel and your selling price. So I think we just want to wait and see how stable things are, and if there is an opportunity to divest, then maybe we'll consider it. But at the same time, it is something that the decision is not yet taken yet. It will have to be investigated, and in due course we will make the necessary disclosure what we're going to do with Australia.
All right. Now during this pandemic, right, how is your business affected, and what are your how do you manage your overhead costs?
I think I'll talk a little bit about the business, and maybe CY can discuss further. I think there were certain important things that we tried to do during the pandemic. First is, make sure that operations are not disrupted. I think that was very important objective. We worked out, business continuity plans, etc. And the team worked very hard on this, both in North Sabah, Chi Seong, the CEO, Pascal at that time also was the CEO, the COO, in the UK, Richard Beattie, who is the CEO of the Anasuria operating company. They've had to work very hard to kind of adapt to all the different SOPs, comply with SOPs. And at the same time, we also had a fundamental responsibility to not just think about the business, we had to think about safety. I mean, we are putting people in a place where there is a invisible virus, invisible threat. So we had to comply with a lot of things, even within our office, keeping the place sanitized, clean, certain rules, SOPs, and all of it. So we had to work SOPs very quickly, and everybody had to learn together to do this, because there was not really procedures written down. So we had to do all of that. And then came the cost side, where we took a risk-based approach to all the work we are doing, making sure that we are only doing what is necessary to be done offshore. So we take as little a number of people offshore to do the operations, at the same time keep it going. Having said that, the North Sabah team did extremely well last year because they had a 4-well drilling program. They had to drill 4 wells. We had already contracted the drilling rig. We had all of this planned, and to run a drilling operation requires a lot of logistics, a lot of planning, a lot of operations. All of this was done and had to be done safely for the people on the rig, etc. And a lot of people worked a lot of hours to make sure the drilling program went well. And because the drilling program went well, we have more production in North Sabah this year. And because of that, our unit operating cost is a function, is a calculation of the total cost divided by the total number of barrels produced. So because we are producing more barrels today, our unit operating costs are more controlled. So a lot of work was done in very, very difficult situations, and a lot of people in the operations team, offshore team, had to be really kind of making a lot of sacrifices to get it all done, but it all got done. Okay, and today we are building on that, but it is not easy. We keep doing our offshore operations as best we can. Like I said, for the Labuan crude oil terminal, we had to create a green bubble for ourselves, our own hotel, our own security, looking after our own asset, all that type of stuff, and getting people in and out so we don't close the terminal. We close the terminal, the offshore production stops. So we can't do that. So we keep everything going as best we can, and hopefully in the next few months, the vaccination program will catch up, and hopefully we will get into more kind of normal operations. But it's been tough. And it's also about taking a lot of what we call a risk-based approach. That means we look at things and we use our judgment and decide whether we think we really need to do this maintenance now, or can we move it, or can we do some of it now and do the essential part now and do a bit more later, etc. So we've been doing a lot of work like this, just around the clock, actually. Okay.
Okay. There are also a number of questions on your view on the crude oil price. As we know that upstream oil and gas players relies if there's a very high oil price, that will benefit the upstream players. So how do you see the oil price going forward?
I think the one thing we have learned is we can't really. I mean, we like to feel positive about the oil price, but having said that, when COVID-19 started, oil price was around $75 to $80, in that range. It was in such a strong place in 2019, and then suddenly along came COVID-19, and the oil price went negative actually for a certain number of days. So it is not something we really want to kind of predict too much. All I will say is, when we do M&A activities, we take a reasonably conservative view. You can see, for example, the crude price deck just now that Deepak was presenting. It is quite a reasonable view of oil price. Also, I would like to say that when the only thing we can do is manage our costs. We can't manage the oil price. We manage our costs. We keep our oil price, our cash costs per barrel to below $30. That's if we keep it below $30, paying for our abandonment, we paying for everything around the asset, pay our overheads and all that. If we can keep it around $30, then we have a lot of room to play around with and hopefully remain keep our business continuity and sustainability there. So I think these are the things we try to manage. Just keep our cost under control.
Okay. The next question is on what happens when the PSC expire? Do you get to extend it?
Maybe let me ask Pascal to take this. Pascal, there you are.
Yep, I'm back.
Okay.
So the PSC is essentially what you do is you sign a contract with Petronas, and that's what they call a production sharing contract. And these always have time limits assigned to them. Now, when the original contract is signed, most of them are signed for 20 years. And a lot of times at the time the contract is signed, this is before exploration even has started. So you don't know, first of all, if you're going to find something, and second of all, you don't know how long, if you do find some, how long it's going to be able to produce. So it's quite natural for PSCs to expire. And what happens most of the time is that the existing operator will apply for an extension, and Petronas will grant the extension, because it doesn't make any sense to take an existing operator away and give it to somebody else. So this particular question, of course, is pertinent to the Repsol acquisition. The PM3 CAA PSC will expire in 2027. That's the second expiration, by the way. The first expiration was in 2017. So what's going to happen is we will apply probably in the next 2 years for an extension. Yeah, with that usually comes some commitments to Petronas. They'll say, okay, yes, we'll give you another 10 years, but in order to justify that, you have to drill this many wells, or you have to do some exploration here. And that's usually the discussion that happens, but I don't think there's any precedent where it's not been extended.
Okay. The next question is by Eric Kong. Is the production of approximately 25,000 barrels per day Hibiscus net share after taking into account the PSC arrangement?
Yeah, go on, Pascal.
Yes, correct. It is. These are the numbers that we showed here in the presentation. These are net to us.
Okay, net. Okay. Lily would like to ask, do you plan to develop hydrogen energy?
Yeah. So I have some strong views about these things, but at this point in time, I think we are in Malaysia. Malaysia has a very good gas resource. As Dr. Weenie was saying just now, we have to, I think, leverage on the resources for our country, which are near to us, and gas will be an important transition fuel. So I think, within the next 10 years, 15 years, maybe for West Malaysia, gas is going to be quite important. Having said that, the people in Sarawak, because they have a longer term strategy, I believe are looking at some hydrogen type initiatives. Maybe Winnie, you'd like to provide some background?
Yeah, thanks, Dr. Ken. Yeah, I think certainly within the state of Sarawak, which is where I come from, yeah, our state is actually trying to be a forefront in terms of the drivers for the green hydrogen. Actually, Sarawak as a state, in and of itself, they are very well endowed with gas resources, having the largest gas reserves in Malaysia. And also, of course, there's a lot of hydropower. It's about 20,000 megawatts. So Sarawak is very well posed for both blue and green hydrogen. But whether, of course, how Hibiscus is going to take on the hydrogen, of course, it remains in the pipeline. Yeah, I've been on board since mid-September last year. And I think on the pipeline immediately, we have a lot of issues to address, the immediate lower hanging fruit, so as to speak. Yeah. Thanks.
Okay, thank you, Wayne, Dr. Wayne, for the feedback. All right, the next question is by Jason. ExxonMobil Malaysia is up for sale. Does Hibiscus see potential in their assets since they are all nearly in PM?
We've been hearing about the ExxonMobil assets being for sale for a long time now. But I'm not sure what is the status of that asset sale. What I know is when the ExxonMobil sales process started, oil price was quite different to what it is now. Oil price is a lot better today, so I'm not sure what ExxonMobil is doing. We are not really updated on what they're doing actually. But it can be that if it was for sale, it would be a very, very expensive asset. Of course, it's a very large asset.
Okay. Logi would like to ask, did Hibiscus consider to max out the production and adopt run-to-end operating philosophy?
Yeah, I think max out, yeah. I think you want to be in a place. Our intention is always, let's say, to max out the production. Okay, I think that's goes without saying. But what we are not going to do is increase a lot the infrastructure that is already there to get higher levels of production. The idea is all the time going back to economics. You know, do you want to max out production and spend a lot of money to max out production and have high production levels for a very short period of time, or do you want to have stable production levels and a very controlled decline and a more responsible approach for the reservoir? You know, all of these things you can manage the what we call the reservoir more responsibly, and you can get more out of the reservoir if you don't pull it too hard. We don't try to produce too much too fast. Okay, so if you produce it at a control rate, I think you get more out of it in the long term. I'm not really the qualified reservoir engineer, but I think Pascal, you may want to give some input here.
Yeah, that's correct. So, I mean, the produce to end strategy is really, you're really talking about end of life assets. Yeah, when you get to the end of the asset, that's when you try to produce as hard as you can until there's nothing left to produce economically. But where our assets are, I mean, they're really midlife, and you want to produce as much as you can responsibly without damaging the reservoir. That's the best that we can do. Yeah, I think both of our assets are producing about as much as they can produce at this point in time, given the number of wells. So in order to produce more, we need to drill more wells. So you have to invest more money.
Okay. There have also been a few questions asking about CapEx. So Dr. Ken, would you want to explain more about your CapEx for the next few years?
Yeah, so you know, at this type of oil price, what you want to be doing is producing as much as you want to produce those barrels that you have in the ground that can be produced in the next 1 or 2 years. You want to be doing that, and we have such opportunities in the UK, so we will be definitely looking at that. We've been talking about the Marigold asset and the Teal West asset in the UK, and this will require some capex. And we have explained in some presentations how we are going to raise the money to do that. In Malaysia, we have a project starting in 2023 also to increase production. But most of it, what we see, will be from existing cash flow and from some borrowings. We should be able to manage it with existing cash flow and some borrowings. Okay. We don't intend to do any form of rights issue or anything like that for capex projects. That's not on our agenda. Our agenda is very much capex projects will be from borrowings or existing cash flow.
Okay,
and quite manageable.
Okay, now could you elaborate further about your green investment plan and strategy? Is it by organic or inorganic growth? And what is the near-term and mid-term target in terms of investment and output capacity? That is by YH Liu.
I think, yeah, let's take this step by step. So I think the first thing, there are two components, and how we are looking at it is firstly, there's a decarbonization, reduce the carbon dioxide and the greenhouse gas emissions from the oil and gas that we produce. That's the first intention. Okay, so how do we do that better? So that is our first objective. We will look at how we introduce, I would say, new technologies into this. We have already started installing solar panels and mini wind turbines offshore on the unmanned platforms, so that we do not use diesel when we are generating electricity offshore. We are trying to do it using a renewable energy means. That's going to be our first target. Okay, that's I would say the first target. The second thing is, I think on the decarbonization side, we are also going to look at ELCOT. ELCOT also is a place where we might be able to reduce some emissions. So we will also be doing that. And there are certain projects that are being looked at. So I think that is a step-by-step approach. The other thing we will do is, if you recall Dr. Winnie's plan, there is also an effort to look at clean energy technologies. Maybe you want to talk a little bit about that again, Winnie?
So yeah, I think Dr. Ken, the question that's been posed is on the green investment, whether how we are going to approach it. Is it through an inorganic growth or an inorganic growth? I think the answer to that at the moment is that, Shane, it is still, we are at the early part of it. What we have actually approved from the board is a set of investment criteria, and our growth strategy is actually at the moment we are looking at, it could be an acquisition of a established companies, an ongoing business, or it could be an investment in a business that has yet to be commercialized. This we have established. It will be a blended of a portfolio for now. So I hope that helps to answer to it. And the second part of it is, have we set targets in terms of, let's say, I think what the question is trying to pose is that, are we like Inson going to post about 3 gigawatt or 5 gigawatt in terms of renewable in our targets? The answer to that is no, not yet. So we are doing it in a very disciplined approach. We're not going to jump into any renewable energy. You know, we do have our own financial hurdle rates that we have to be very disciplined about, primarily because this investment do needs to provide the kind of return that will not erode our shareholders' value. So I hope that helps to provide some light on our investment plans.
Okay, thank you so much, Dr. Winnie. Let's do one last question. Then we will conclude the session today. Kim Moon Kyu would like to ask, what is the biggest mistake you have made last year, and what have you done about that?
The biggest mistake last year.
Yeah.
Oh, mistake last year. I'm trying to wonder what was the biggest mistake last year. Can you think of one, Pascal? I can't really.
I knew you were going to shove that one my way.
No, I'm trying to think of the biggest mistake last year. Oh, Joyce, why don't you've been very quiet all day. Why don't you kind of maybe you've had time to think about this? Any ideas what was the mistake you made last year? You're mute, Joyce. You're mute.
Hard to answer that question, because actually I think we, comparatively speaking, compared to a lot of other players, I think we handled last year actually pretty well, and we came out came out profitable, cash flow positive. So that's a difficult question to answer. I'm not sure there is an answer to that.
Okay, no worries. Let me switch to the other more interesting questions on talent management. Okay, now last question. Okay, Patrick would like to ask, Hibiscus leadership team has a very formidable CVs. Okay, as can see. So you probably have one of the highest, if not the highest, concentration of PhD and graduate of the top universities in your company. So how are you able to draw and retain quality talent?
I think we just try to give them opportunity. Okay, I think if you just bring people in and just give them opportunity to contribute, just give good people opportunity to contribute, and I think they're able to deliver good results, and they're motivated to even deliver more. And then when you get one or two people who kind of talk about that, finally birds of a feather flock together. That's my view, actually. If you employ one person who's smart, chances are they were around with another person who was smart. So they will probably bring their friends in, or they will talk positively about you. I just think that's just the way. And I'm happy there are shareholders who think that. I think we just try to include everybody in what we do. We try to give young people a chance to kind of just sit in meetings that normally I don't think many of them would even get a chance to sit in. But because we're a small company, we need their help. We want their contribution. We're happy to hear their ideas. and we are happy that they're able to kind of motivate themselves. So I think if you give people the opportunity and you just get some good people, they will somehow or the other deliver good results, and I think that just is a very contagious type of atmosphere and culture, and then more and more good people join you. I think that's how it is.
All right. So thank you, Dr. Ken, and all the other panelists for joining us today to talk about your 10-year growth story and also your plan going forward. So let me just briefly share my slide. Okay. So for our next CanTrade webinar, it will be happening on next Tuesday, where we will talk, where we invite the management of Pi Industrial Berhad to come and talk about this session, which is pushing frontier in automation and robotics. All right. So it's 8:30 to 9:45. If you want to join us to learn about this electronic manufacturing services company, PIE, so please register for our next CanTrade webinar happening on next Tuesday. All right. So we have got the Mr. Alvin Mui, who is the CEO of Pi Industrial Berhad, to come and share with us their story. So following that, following Pi Industrial Berhad, that will be the SCGM Berhad, which will talk about sustainable business practices going forward. We've got the Executive Chairman, Dr. Sri Lee Hock Seng, to come and join us on the 22nd of July, which is a Thursday. So these are the calendars that you need to block if you want to hear from Pi and also SCGM. So for those of you who have not had a Kenanga Share Trading account, we have given you the link in the chat group for you to fill up. So if you're interested to open one Kenanga Share Trading account, please go to www.cantrade.com.my/open-account-form to put in your interest. So once you put in your interest, then the Kenanga will arrange a friendly dealer representative to attend to your account opening needs. All right. So with that, thank you everybody for joining today's session. And most importantly is thank you so much to the Hibiscus Petroleum Berhad senior management team. We have so many of you here who took your time out of your busy schedule to join us in this CanTrade webinar to share with us about the insights into your company background, and then your plan, your talk about the recent acquisition of the oil and gas asset from the Spanish oil major, and also your ESG policies going forward. So thank you so much for sharing with us this insight. Yeah, and thanks all of you here for tuning in until the end of this session. So hope to see you all on the next Tuesday. All right. So have a great evening, everybody. Right. This is Shane Chu signing off.
Thank you very much. Thank you, Shane.
Yeah, thanks, Dr. Ken.
Thank you very much.
Thanks, everybody.
Bye.
Yeah,
Thank
thanks,
you.
Deepa. Thanks, CY. Thanks, Lily.
Thanks, Shane.
Yeah.
Thank you. Bye-bye. Good night.
Thank you.
Thanks, Dr. Winnie. Thanks, Joyce.
Thanks.
Thank you.
Shane.
Bye-bye.